China just triggered what could be the biggest silver squeeze in modern history. On January 1st, 2026, China officially restricted silver exports to the United States. And we're talking about a country that controls 60 to 70% of the world's entire silver supply. The results were immediate. Silver prices exploded to over $80 per ounce. That's more than doubling in just 12 months. But here's what really caught my attention. Elon Musk jumped on X and said, "This is not good. Silver is needed in many industrial processes." When the richest man in the world is sounding the alarm about a metal shortage, you know something massive is happening. And that brings us to the question every investor is asking right now. Is this just the beginning of a silver supercycle, or are we looking at a bubble about to burst? Because what's happening with silver right now isn't just about China playing hardball with trade. We're seeing three massive forces colliding at the exact same time. Industrial demand is exploding, global supply is crashing, and the US dollar is having its worst year in over a decade. And that's exactly what I want to break down for you in this video, so you can understand what's really driving the silver surge and how it could impact your investments in 2026. Look, silver absolutely crushed every other major asset in 2025. And while the stock market had a solid year, growing around 16%, and Bitcoin did its thing, silver went completely ballistic, surging over 100%. That means if you put $10,000 into silver at the beginning of 2025, you'd be sitting on over $20,000 today. But here's the thing. This wasn't some random speculative bubble. This was a perfect storm of three massive trends that all hit at the exact same time. First, we have demand going absolutely crazy. The world is shifting to technologies that are silver hungry. Electric vehicles need 67 to 79% more silver than regular cars. AI data centers are consuming silver at unprecedented rates. And solar panels, each one requires 15 to 25 grams of silver, and we're installing these things at record pace. Second, supply is getting choked off. China didn't just wake up on January 1st and randomly decide to restrict silver exports. This was strategic. They're keeping their silver for their own massive industrial expansion while cutting off the rest of the world. And remember, China controls the majority of global silver refining infrastructure. Third, policy changes are accelerating everything. The US government officially designated silver as a critical mineral in late 2025. That means Washington now considers silver access a national security issue. When the government starts treating a metal like it's essential for defense and economic survival, you know the game has changed. So we're not just looking at a price spike here. We're looking at a fundamental reshaping of how the world thinks about and uses silver. Let's talk about why the world suddenly needs so much more silver, because this demand explosion is unlike anything we've seen before. Start with artificial intelligence and data centers. The Silver Institute estimates that global IT power capacity has increased by over 5,000% since 2000. We went from less than 1 gigawatt of computing power to almost 50 gigawatts in 2025. And every single one of those data centers, every AI server, every high-performance processor, they all need silver for electrical contacts, conductors, and thermal management. Here's what makes this crazy. Governments around the world are treating AI infrastructure as critical to national security. The US, UK, European Union, and China are all throwing massive incentives at companies to build more data centers. So this isn't demand that is going to slow down if silver prices go up. This is demand that governments are actively subsidizing. Then you have the electric vehicle revolution. A regular gas car uses about 15 to 28 grams of silver. But an electric vehicle? We're talking 25 to 50 grams per car. That's nearly double the silver content. And if we get to the solid-state silver batteries that some companies are developing, we could be looking at over a kilogram of silver per electric vehicle. The European Union alone wants to hit 700 gigawatts of solar capacity by 2030. Each solar panel needs 15 to 25 grams of silver for the conductive paste that makes the whole thing work. Do the math on that. We're talking about hundreds of millions of ounces of silver demand just from solar installations in Europe. But here's what really gets me excited about this demand story. Silver only makes up a tiny fraction of the cost of these end products. In a $50,000 electric vehicle, the silver might cost $100. In a solar panel system, silver is maybe 2% of the total cost. That means even if silver prices triple, manufacturers will keep buying it because they have no choice. There's no substitute that works as well as silver. This isn't like oil where higher prices make people drive less. This is industrial demand that has to be met regardless of price, because without silver, these technologies simply don't function. Now, while demand is going through the roof, supply is getting absolutely crushed. And I'm not talking about some temporary hiccup. We're looking at a structural supply crisis that's been building for years. Here's the shocking reality. Global silver demand has exceeded supply for 5 consecutive years. In 2025, the world needed about 1.24 billion ounces of silver, but total supply, including mining and recycling, only delivered around 1.01 billion ounces. That's a deficit of over 200 million ounces in a single year. But China's export restrictions just turned this slow burn crisis into an emergency. Starting January 1st, any company that wants to export silver from China needs a special government license. And they're not handing these out like candy. You need to prove you've been exporting silver consistently from 2022 to 2024. Or if you're a new applicant, you need to demonstrate annual production exceeding 80 tons. What this means in practical terms is that China has just locked down 60 to 70% of global silver refining capacity for domestic use. They're keeping their silver to fuel their own industrial boom while leaving the rest of the world scrambling for scraps. The impact is already showing up in the most dramatic way possible: a massive price split between paper silver and actual physical metal. In Shanghai, physical silver is trading above $80 per ounce. Meanwhile, COMEX futures, that's the paper contracts traded in New York, they're still hanging around $30 to $35. Think about that for a second. If you want to buy actual silver in Asia, you're paying more than double what the futures market says silver is worth. That's not normal market behavior. That's a supply emergency. And the inventory numbers tell the same story. COMEX registered silver inventories in the United States are down nearly 70% since 2020. London vaults have lost around 40% of their silver holdings. Shanghai inventories are at their lowest level in a decade. Some industrial regions have barely 30 to 45 days of accessible silver reserves left. This is what happens when the world's dominant supplier decides to keep their resources at home. China learned this playbook with rare earth metals over the past decade, and now they're applying the same strategy to silver. Control the supply, control the market, control the leverage in trade negotiations. Now, there's another massive piece of this puzzle that we haven't talked about yet, and that is what's happening with the US dollar. In 2025, the US dollar had its worst performance in almost a decade. The dollar index fell nearly 9.5%, which might not sound like much. But in currency terms, that's absolutely massive. And here's the thing. When people lose confidence in the dollar, they traditionally run to precious metals as a safe haven. But silver is different from gold in a really important way. Gold is primarily an investment and monetary asset. People buy gold when they're worried about inflation, when they're concerned about currency debasement, when they want to protect their wealth. Silver does that too, but silver also has this huge industrial component that gold simply doesn't have. Think about it this way. If the dollar keeps weakening and people want to buy precious metals, they might start with gold. But if they want leveraged exposure to the precious metals trend at a lower entry price, they often move into silver. That's why the gold-silver ratio is such a big deal for investors. Right now, that ratio is sitting around 80 to 83, which means it takes about 80 ounces of silver to equal the value of 1 ounce of gold. Historically, this ratio has swung wildly. Sometimes it's been as low as 15 to 1, other times it's spiked above 100 to 1. But when the ratio is this high, it often signals that silver is undervalued relative to gold. And here's what's really interesting. Central banks around the world are diversifying away from dollar reserves at an accelerating pace. They're buying gold at record levels, but they're also looking at other alternatives. When central banks start questioning the dollar's dominance, that creates a whole new dynamic for precious metals. The Federal Reserve's policies are adding fuel to this fire. With ongoing concerns about inflation, massive government spending, and political pressure on Fed independence, investors are getting nervous about the long-term stability of the dollar. When Trump's administration served the Fed with grand jury subpoenas in early January 2026, that sent shockwaves through currency markets. But here's where silver's hybrid nature becomes really powerful. Yes, people are buying silver because they're concerned about dollar weakness, just like they buy gold. But they're also buying silver because industries desperately need it for all those technologies we talked about earlier. So silver gets support from both investment demand and industrial demand at the same time. This dual demand profile is why silver often outperforms gold during periods of dollar weakness. Gold might go up 60% when people lose confidence in the currency, but silver can double or triple because it's getting hit from multiple angles. Monetary demand, industrial demand, and speculative momentum all feeding into each other. The bottom line is this. Dollar weakness isn't just a background factor here. It is an accelerant that's making the silver supply crisis even more explosive than it would be otherwise. All right, now that you understand what's driving this silver surge, let's talk about how this creates potential investment opportunities. And I need to remind you up front, I'm not a financial advisor. I'm just a guy making YouTube videos. Investing always has risks. You're never guaranteed to make money, and you will lose money at some point. So make sure you do your own research and never blindly follow what anyone says on the internet. That said, let me show you how to think like an investor about this situation. If you believe silver prices are going to continue climbing, you have several ways to get exposure. The most direct approach is buying silver itself. You can buy physical silver if you want to hold the actual metal, or you can invest in silver ETFs like SLV or SLVR. These give you exposure to silver prices without having to store bars and coins in your house. You can also invest in silver mining companies through ETFs like NSIL, which tracks the Global X Silver Miners ETF, or SLVP from iShares, that gives you exposure to global silver miners. When silver prices go up, mining companies often see their profits increase even faster because their costs stay relatively fixed while their revenue explodes. But here's where it gets interesting. This situation creates opportunities beyond just silver itself. If China is restricting exports of critical materials, that means the United States has to build up its own manufacturing and supply chains. The Trump administration is already using tariffs and tax incentives to bring more manufacturing back to America. If you think this trend continues, you can invest in U.S. industrial development through ETFs like XLI, which gives you exposure to American industrial companies, or PAVE, which focuses on infrastructure and industrial development. Then there's the China angle. Now, China's economy has taken some hits, but they're playing a strategic game here. By restricting silver exports, they're trying to boost their own domestic industries while reducing dependence on the United States. If you think China's strategy works and their economy grows stronger, you can get exposure through ETFs like FXI, which tracks large Chinese companies like Alibaba and Tencent, or MCHI for broader Chinese market exposure. But here's what really gets me thinking strategically. If China becomes less reliable as a silver supplier, where does the world turn? Mexico is actually the world's largest silver producer, and you can get exposure to the Mexican economy through EWW. Australia is another major player, especially as the US invests more money into Australian rare earth production. You can invest in Australia through EWE. Now, I want to be clear about something. These aren't perfect one-to-one correlations. Investing in the Mexican economy doesn't guarantee you'll benefit from higher silver prices. But this is how you start thinking like an investor. You look at the big picture trends and ask yourself, if this happens, then what else is likely to happen? If silver becomes scarce and expensive, what countries benefit? What industries have to adapt? What companies are positioned to solve these supply chain problems? That's the kind of strategic thinking that can help you identify opportunities that other investors might miss. The key thing to remember is that your investment strategy needs to match your personal situation. Your risk tolerance is different than mine. Your timeline is different than mine. Your financial goals are different than mine. So use this as a starting point to think through what makes sense for your specific circumstances. So here's what we just covered. Silver prices exploded over 100% in 2025 because of a perfect storm. We saw massive industrial demand from AI, electric vehicles, and solar panels. We saw China cut off 60 to 70% of global supply through export restrictions. And we saw the US government designate silver as a critical mineral for national security. This isn't just a price spike. This is a fundamental shift in how the world economy works. When Elon Musk is tweeting warnings about silver shortages, when governments are treating metals as weapons in trade wars, when the gap between paper and physical prices hits $50 per ounce, we're not in normal market territory anymore. The question now is whether this trend continues through 2026 or if we see prices come back down to earth. And honestly, that's going to depend on how these supply chain battles play out, how fast industrial demand grows, and whether countries can find alternatives to Chinese supply. But here's what I know for sure. These kinds of structural shifts create massive investment opportunities for people who understand what's happening and position themselves accordingly. Whether that's silver itself, mining companies, US manufacturing, or alternative supply chains, there are ways to potentially benefit from these trends if you think strategically about it. Now, if you found this breakdown helpful, I need to ask you a favor. The best way you can say thank you is by sharing this video with someone who would benefit from understanding what's really happening with silver and the global economy. Send it to a friend, family member, colleague, or fellow investor. That's how we keep spreading this type of financial education. And if you want to go deeper into how these economic shifts are creating investment opportunities across different sectors, hit that subscribe button and turn on notifications. Because what we're seeing with silver is just one piece of a much bigger puzzle about how the global economy is changing in 2026.